Hi guys, and welcome to my channel where I will be explaining how to do the topics and answer exam questions in the accounting A-level course and maybe even at the start of the university course. In this first episode I'll be explaining some key terminology that's essential within the course and will also help to prepare some important statements. So let's get straight into it. An asset is something that the business owns or benefits from. For example, its stock. A liability is something that the business owes, for example, its debts to its suppliers. Non-current assets are things that the business will typically own for at least a year. These can be major, for example, a factory, or they can be smaller, for example, a printer. Non-current liabilities are things that businesses owe and are not typically going to pay off within 12 months, for example, a big bank loan. Credit terms are effectively an agreement that the fee that is owed will be paid in either 30 days, 60 days, or 90 days. Again, whichever one is agreed. Trade receivables, also known as debtors, are customers who owe you money for a product or service that you have provided on credit terms. Trade payables, also known as creditors, are suppliers who you owe money to for a product or service that you have purchased on credit terms. Revenue is the money that you make from sales. A purchase is when you buy a good specifically for resale. For example, a non-current asset is for your business to keep and you are not reselling that, therefore it's not a purchase. Whereas stock that you buy, you are planning to resell it, therefore that is a purchase. Returns inwards are sales returns, so when you sell a good to a customer and they return it to you. Returns outwards, also known as purchase returns, is when you purchase a good but then you return it to the supplier as you're not happy with it or it may have been damaged. Pro might help you to remember what is which. So P stands for purchase, R stands for returns, and O stands for outwards. So PRO, purchase returns outwards. Expenses are anything that is paid for that's not an asset or purchase. For example, your electricity, rent, or even depreciation. Other income is income that isn't from your revenue or a liability. For example, rent received is another income. Shareholders are people who own shares within a business, whether that's public limited company or private limited company. Capital is the original investment, could be assets, for example a car, or it could be assets like cash, which are put in by shareholders or owners into the business. The accounting equation is capital equals assets minus liabilities. Drawings are monies that owners or shareholders take out of the business and must pay back. A prepayment is when you pay for a service or product in the financial period before it is actually required or used. An accrual, on the other hand, is when at the end of the financial period you still owe money for a service or product that you used or acquired during the period that has just finished. That's all for the first video, just something to ease you in and get started. Thank you guys for watching, and if you want to see more then please like, comment and subscribe to let me know.